What's up, traders? Welcome back to the channel. It's time for your latest XAU USD market update. Today, we're diving deep into the gold charts to break down the latest moves, key levels, and what to watch next as the markets heat up. Whether you're holding long, eyeing a reversal, or waiting on the sidelines, this update is for you. Let's get into the action. So currently, we are on the 1 hour time frame of the gold chart, and as you can see, price has clearly broken above the 3,400 line and it went straight to the 3,500 line. So I remember yesterday, which was on Monday, I'd say that before we break above this 3,400 line, what I was waiting for was to see some kind of retracement move or even a reversal. So that's what I was waiting for, and I'd say that I would not take a trade on Monday, which I did not do. So I did not take any trade on Monday, and as you can see, price went ahead to break above 3,400 line, which is the line right here, and it went straight for the 3,500 line. So what was created yesterday on Monday? So as you can see, before we broke the 3,400 line, price had created other areas of liquidity that we could have used to enter the market. So at first there was this level right here. This was the first level, and then this was the second level that was created. So this level was created at around 11 a.m. but activated at 2. So there were traders that took this first entry on gold. So as you could see it better on the 15-minute time frame, as you can see. And after that, price left an area where resistance turned to support. So that's an area to look out for. So this is one of the areas. This here is one of the areas that is holding up price right now. And then price kept on creating other areas of re-entry. There was this other level here where support turned to resistance, and what happened? This one was created at around 8:30. As you can see, 8:30 could completed. The move could completed with a wick to body break above here at around 9:40. So this confirmed that this was a valid area to look at, and it got activated at around 3 a.m. today, Tuesday. That was in the Tokyo session, and after that, price went parabolic, and it went straight to the 3,500 price level, where at around 9 a.m., which was pre-London open, price then tanked lower. But as you can see, to me, this is not a conclusive reversal pattern to me, or change of state of delivery in this market. To me, this is only a retracement move, and I'll explain why. First of all, going to the 1 hour time frame, we can see that currently this is our new swing high, and the price is still bullish. The price action is still bullish. We're still creating higher highs and higher lows. So currently, this is the first real higher high higher low that I would consider. And unless this area gets broken, I'm still bullish on gold. Why? Well, also there are other factors in place, and the other factors are actually fundamental. But just by looking at the technical aspect of it, or just looking at the candles and how they're forming, this market is still moving bullish. As you can see here, this is our recently created bullish area of liquidity, as viewed on the 1 hour time frame. Daily is actually still bullish, so all the more reason why I'm looking for bullish areas of liquidity so that I can enter more positions. Have I entered any positions? No. As I said yesterday on Monday, I said I'm not going to enter a position, so I was only waiting for Tuesday to roll out and see how price moves and plot my next trade for this week, or probably the next weeks actually. And the way, and by looks of it, am I surprised by how the market is moving right now? Absolutely not. Just by looking at the previous videos that I had made, the first pre-market analysis video that I had made on this channel, I had said that usually going to the 1 week time frame, the weekly time frame, usually in a trend, the candle that engulfs this counter candle tends to create the next candles that follow tend to be identical to the candle that engulfs. The next 2 to 3 candles that get created are identical, right? And usually they tend to range either half, sometimes a little bit below, sometimes half, or sometimes even equal to this candle that engulfs. And anyway, as we can see, the first candle that was created, and I'm only marking for the bodies really, the next one, the candle that was created here, just looking at this body, it went up to 900, closed at 900 pips, but we all know that it went up to 1,000. That's how we put the other 1,000 pip trade. And the next candle that got formed, which is the week that we're in currently right now, is this one right here, and it already went well over 1,000 pips, even actually well over 1,050. So it could actually even go up to 2,000. But that's only if it breaks above the 3,500 line. And looking at the way it was created, well, it was created with a little to no, even though it's a bullish candle, it was created with a little to no wick at the bottom, as you can see. But then there is an explanation for this. Looking at the way we closed on Thursday, before the Easter holidays rolled in, closed off bearish, and given the fact that gold is a highly, impulsive pair, this was already the market pose for this candle, for this pair, right? Usually after an impulsive move, we expect a retracement. This retracement is the pause in the market, so the price, the algo gathers liquidity and then pushes prices higher. We can examine this phenomenon better on the 4-hour time frame, the thing that I was talking about collecting liquidity. So as you can see, we closed off right around here on Thursday, right? It's right around here, and right around here. And what do we see here below? We see strong wick rejection from below, and usually these wicks tend to also represent rejected price levels. So before we closed off for the last week, we presented strong bullish intention in this market. So by the time the price opened on Monday, there was no need for prices to go lower. In the event that actually price was to go lower, that means we would be now reclaiming this week here, we're doing a wick fill, and after the wick fill, and in the event maybe we see a wick to body break, then that would mean that now the market has reversed to the downside. That didn't happen, and but what else happened? Well, we just kept on going higher and higher, and actually it seems like this market just keeps on going higher and higher, and according to some other research that I've done on the side, I expect this market to go even up to the 4,000 price level. So in the event that we see price breaking above the 3,500 price level, I expect to see price to go up to the 4,000 mark. So from 3,500 to 4,000, in between there we have 5,000 pips. We literally have 5,000 pips in this zone right here, and those are actually about 5,000 pips. So those are potential trades that we could take in the event that price presents to us an opportunity to still go bullish. In the event that we see that, well, there will be no reason why not. Currently, we are making a retracement. So as we can see, we're going to examine this better now on the 1 hour time frame. The 1 hour time frame, what do we see? According to the previous video that I had made on Monday, I'd say that by the time price comes to the 3,400 line, we would see some kind of retracement or even a reverse. So I'd expected a reverse, but then that's not what happened. Price instead came into these bullish areas of liquidity that had been created, the recent ones, and gave us new entry levels. See this? So now this is one of the levels that is now holding up price. So as you can see, this level here pushed price to break above 3,400 line, came for a little retest, and went higher and higher. Now, as price went higher and higher, at around 9:30, a new area of liquidity had now got formed. An area where resistance had turned to support, and then what do we see? So as this area got created right here, as you can see, price on opening in the Tokyo session of Tuesday. So price opened around here on Tuesday today, and we see price do a little break above. We do a little retest down, so that means we have created our daily low already. And as we created our daily low, we tapped exactly into this price level right here. And then what happened? This level, price was pushed parabolically to this price level of 3,500, and at around 9 a.m., that's pre-London open, we see that price then started to do a little reversal down. But at the moment, I still consider this as a weak high. Why? Price has still not broken below this level. So currently we're being held up by first this level right here. The next level that is holding price up is this level right here. And this is the swing high that has been created currently. And it's still, given the fact that we're still looking bullish, this is a weak high according to this market price action. Even though we kind of see signs of sellers trying to push prices lower and lower, all we know is that price is only being pushed to this newly created area of liquidity to then come pick liquidity and potentially break above this price level. So currently I don't have any orders running, but I'm only waiting to see price come to this level right here. Another area where resistance turned to support, given because, well, we are in a bullish market. So what do I expect to see? I expect to see, this is not financial advice, by the way, this is only my analysis. So I expect to see price do this. In the event that I see price do this, probably this could be like on the 15-minute time frame, 30 or 1 hour. I will be truly, my bias will be truly confirmed that price is definitely going to come and break this price level here. But in the event that price comes and breaks below this level right here, well, what do we expect? We expect to see prices go lower and potentially come for these lower buying areas of liquidity as presented down here. Okay, those would be the levels. Those would be the levels that that we would consider. But other than that, we're still looking bullish. So I need to see this. In the event that it doesn't happen, well, it's fine. There are more opportunities that will get created. But in the event that we, in the event that price respects this level right here, we'll definitely see price break above this level. And now that our new target will be this 5,000 pip range from 3,500 to 4,000. Because, you know, as a trader, you just have to be reaction. You just have to react. You don't need analysis. It's just analysis to just give us an idea of what price is going to do. But nothing is really set in stone because anything can happen. You know? But as it stands for now, currently, the reason why we're seeing gold moving parabolically like this, even in the Tokyo session, I mean, look at this. Price moved for literally 800 pips, or you can call that 8,000 points. 8,000 points in the Tokyo session. You can't really make this up. You just can't make it up. See that? Tokyo session, 8,000 points. Okay. Oh, even this smart money indicator shows a weak high. So yeah. So basically, almost everything is lining up bullish. So we're still bullish unless we're invalidated at this price level. Though there is still a lot of demand for gold. I mean, China just keeps up buying more gold reserves day by day. We see investors pulling money out of the stock market, and where does that money go? Of course, it goes to these safer assets, the metals, and one of those is gold, and that's probably why we see the market moving the way it's moving right now. And if things keep going the way they're going, well, we could even see price completely break above this 4,000 price level. It could actually be an underestimation of what gold's price level will be by the end of this year. But as it is for now, currently looking like this, we're in between the price level of 3,400 to 3,500, and we're waiting to see how price reacts at this price level particularly. with all of that said, I think I'll keep you guys updated later on. So all we can do is to wait and see how price moves. Peace.